Instead of funding AI-ready data centers entirely on its own balance sheet, TCS is building Hypervault as a 51/49 joint venture with TPG Terabyte. From TCS perspective, which capital allocation approach does this most closely represent? Your options are: A. Full in-house CapEx model funding all assets only from TCS balance sheet. B. CapEx-like JV partnership sharing asset funding with investor while retaining control. C. Pure buyback-driven strategy using surplus cash mainly to repurchase own shares. D. Short-term treasury parking placing excess cash in liquid financial instruments. And the correct answer is option B. CapEx-like JV partnership sharing asset funding with investor while retaining control. TPG Terabyte will invest up to 8,820 crore rupees in Hypervault through a mix of equity and debt, with its final equity stake expected to lie between 27.5% and 49% based on the equity-debt split. Which deal structuring concept best explains this approach? Your options are: A. Senior secured loan package only collateralized debt with no equity stake. B. Plain minority equity deal fixed ownership stake without any lending exposure. C. Temporary bridge facility short tenor funding mainly to cover timing gaps in cash. D. Structured equity debt capital stack are blending instruments to tune risk, yield and stake. And the correct answer is option D. Structured equity debt capital stack are blending instruments to tune risk, yield and stake. Greyhound Research argues that TCS is taking direct control of the AI stack's physical base layer by designing and operating liquid-cooled, high-density data centers through Hypervault. Strategically, how is TCS repositioning itself in the value chain? Your options are: A. Vertical integration into infrastructure, moving downward to own the physical compute layer. B. Horizontal diversification into apps, shifting sideways into unrelated packaged software lines. C. Outsourced infrastructure model, exiting ownership and relying on third-party data center vendors. D. Pure asset-light integrator role, avoiding hard assets and focusing only on consulting work. And the correct answer is option A. Vertical integration into infrastructure, moving downward to own the physical compute layer. Hypervault is positioned as secure, scalable, AI-ready infrastructure for hyperscalers and AI-led enterprises, with TCS collaborating with cloud providers and AI firms to design, deploy and optimize next-generation AI infrastructure. In ecosystem terms, what role is TCS aiming to play with respect to hyperscalers? Your options are: A. Isolated internal user role, building capacity only for its own captive workloads. B. Commodity rack space tenant, leasing standard space based solely on lowest price bids. C. Strategic ecosystem partner role, co-designing AI infrastructure with hyperscalers and enterprises. D. Passive resale channel, simply reselling cloud capacity without shaping architecture choices. And the correct answer is option C. Strategic ecosystem partner role, co-designing AI infrastructure with hyperscalers and enterprises. Jim Coulter of TPG notes that data centers are a multifaceted asset class at the intersection of green energy, technology, and real estate, and Hypervault will use energy-efficient, high-density facilities with strong cloud connectivity. From TPG's investment thesis perspective, how is this platform best classified? Your options are: A. Short-cycle working capital item, quickly turning stock with minimal asset duration. B. Core plus infrastructure, real asset, long-lived facilities with stable cash flows and upside. C. High-frequency trading book, rapidly traded positions in liquid marketable securities. D. Pure intangible IP bundle, portfolio of patents and trademarks without physical footprint. And the correct answer is option B. Core plus infrastructure, real asset, long-lived facilities with stable cash flows and upside. Building liquid-cooled, GPU-rich data centers for AI involves large upfront capex, technology obsolescence risk, and utilization uncertainty. By structuring Hypervault as a joint venture where TPG brings capital through equity and debt, what risk management approach is TCS effectively using? Your options are: A. Concentrating all asset risk on its own balance sheet with no external capital support. B. Fully exiting infrastructure risk by only signing operating contracts with third-party owners. C. Hedging risk solely through short-term derivatives on power and real estate indices. D. Sharing infrastructure risk with a specialized financial investor while keeping strategic control. And the correct answer is option D. Sharing infrastructure risk with a specialized financial investor while keeping strategic control. Hypervault is described as a climate-positive bet with purpose-built, liquid-cooled data centers, higher energy efficiency, and alignment with green energy infrastructure. From an ESG and strategy perspective, which positioning best captures this move? Your options are: A. Sustainability-led infrastructure differentiation using greener, more efficient designs as a strategic edge in data centers. B. Pure cost-cutting play, ignoring environmental impact and focusing only on minimal operating expenses. C. Compliance-only posture, doing the bare minimum required by regulation, with no strategic emphasis on ESG. D. Neutral technology stance, avoiding any commitments on energy sources or environmental outcomes. And the correct answer is option A. Sustainability-led infrastructure differentiation using greener, more efficient designs as a strategic edge in data centers. India's data center capacity is around 1.5 gigawatts today and projected to cross 10 gigawatts by 2030, implying strong but uncertain growth in AI and cloud workloads. For Hypervault, which capacity planning approach would be most consistent with this outlook? Your options are: A. Single mega build upfront, constructing the entire long-term capacity in one early project. B. extremely conservative stance, avoiding any new capacity until demand is fully guaranteed. C. Staged modular build-out, adding high-density, AI-ready capacity in phases as demand materializes. D. Random site additions, choosing locations opportunistically without reference to long-term plans. And the correct answer is option C. Staged modular build-out, adding high-density, AI-ready capacity in phases as demand materializes. Hypervault targets hyperscalers and AI-led enterprises, and TCS plans to collaborate with these players to design, deploy and optimize next-generation AI infrastructure. From a B2B marketing and sales perspective, which go-to-market approach fits this target segment best? Your options are: A. Mass advertising-led push, relying mainly on broad media campaigns and generic promotions. B. Key account and solution selling model, deep engagement with a few large clients to co-create tailored AI infrastructure. C. Low-touch self-service model, offering standardized products with minimal human interaction. D. Retail-style channel sales, focusing on distributors and resellers for small-ticket customers. And the correct answer is option B. Key account and solution selling model, deep engagement with a few large clients to co-create tailored AI infrastructure. In Hypervault, TCS owns 51%, while TPG's equity stake is expected to land between 27.5% and 49%, depending on the equity-debt mix. From a governance standpoint, which arrangement most accurately reflects how such a JV is typically structured? Your options are: A. Strategic sponsor retains majority control with board leadership, while investor holds strong minority rights on key reserved matters. B. Financial investor fully controls the board and operations, with the strategic sponsor acting only as a passive capital provider. C. Both parties surrender operational control to an external management company with no board involvement. D. Governance is irrelevant because the debt portion alone determines all strategic decisions and approvals. And the correct answer is option A. Strategic sponsor retains majority control with board leadership, while investor holds strong minority rights on key reserved matters.